How much have you made from this crypto list this year alone with the Elrond call? And
Probably like closer to 4 million so far. You're not making a lot of money from YouTube. You're doing it because you want to help people understand who to follow and why. And like I've always told people, like they're like, oh, money this, money that, and they always focus on money and they never make money. They never make real money.
that you can just increase your income as well as increase your investments.
Yeah.
Just do a side hustle, do more hours at work,
That too, yeah.
and grow your account while you're trading with the correct risk. And one of the biggest things is that Ichimoku trading strategy, which is one of the things that makes you different to most other traders out there. Nobody uses it. What's up, guys, and welcome back to the channel. And you're probably wondering about this crazy setup. Well, I have decided to get some very interesting minds and some of the biggest brains in crypto and bring you all the alpha from the source. And the very first guest we have is somebody which you guys have seen before. You've seen the Ichimoku trading strategy. You've seen the calls for the bull market. You've also seen the crypto list, which I already told you I was inspired by the man. And everybody said, no, who's this imaginary guy? Tyrell's making this up himself. Well, I didn't.
Because
somebody here. In fact, how much have you made from this crypto list this year alone with the Elrond call? And
probably like closer to 4 million so far.
And
even with pullbacks and stuff.
And we're just getting started.
And like the market's not even really gone on this thing. I was talking just the other day about cycling and stuff, but we can talk about that a little bit later.
We'll talk about that soon, right? Exactly. So, yeah, you know, it is a real person, and this person is Joel. So, Joel, welcome to the show, otherwise known as Coach K.
Yes, sir. Thank you for having me again.
Anytime, bro. Anytime. So,
well, maybe we'll do our own show together. We'll see.
You already know, and
Absolutely.
it's gonna go wild.
Absolutely, it's gonna be wild, man. Okay. Won't just be crypto economy, lifestyle too. You guys see what we do with, you know, you make money, but what do you do to be happy with it? So we do a lot of that kind of stuff too.
Yeah,
show you that type.
It's crazy because especially on crypto, YouTube, and Twitter, people don't think like we have a normal life.
No, they think it's a lot of fake influencers and all that kind of stuff. But there's a lot of those, so I understand that's why people feel that way, and it's really hard to know who you can trust. So
exactly,
that's part of the game in this space. Like same with the projects, who you trust, why would you trust them, what's their background, right? So who are the people you're listening to, you know? It's
exactly.
really important.
it's like what I've always noticed, especially coming up in the crypto game, is it's the people that you don't see that have all the knowledge because they're busy making money.
Absolutely.
You know what I'm saying? And especially with your channel, I would always watch your videos back in the day, and they'd be infrequent, but whenever they'd come, they'll be like gold. I remember everyone going there.
Trying.
You have to. It's crazy, bro. It's literally like gold mines. But other people make daily content every single day, and eventually it starts to feel fake and a lot kind of unrealistic.
I mean, there's just not enough to talk about in the market. Like, unless you're a day trader, which most people lose money doing that. I don't even day trade. I would lose money doing that too. It'd make me too emotional. I would be looking at the chart all the time. So yeah, it's just the time horizons and things like that you have to think about.
Yeah, exactly. Yeah. It's like if somebody's really making money like that, then they wouldn't have that much time to spend on these things. Exactly.
Yeah, and then, you know, you're not making a lot of money from YouTube. You're doing it because you want to help people understand who to follow and why, and like what things that you're saying are much better than listening to the Moon Boys out there. And then like giving information, and then not just giving them everything, letting them go and find a little bit more. Like, here's what I've invested into. I'll tell you a little basics about it, but then you have to go and find out who's involved, what's going on with it. And, you know, I like teaching people what to look for so they can feed themselves instead of feeding them. Because you never know in life when you're going to be here, when you're going to be gone, or if you're just like going to be like one day, okay, I'm tired of doing this, I want to do something else. Like, you know, I've wanted to go in TV and acting and stuff like that as well. So like that might be a thing where I go into it and I won't be as active. Maybe TV and acting stuff that I do will be in crypto and be about crypto stories, and that would be interesting as well. But you know, you just never know when you're going to be like, okay, I've achieved all I can in this space and go somewhere else. So I'm trying to leave the breadcrumbs so other people can do what I'm doing and say like, hey, this is what I've learned, and now they can become leaders. So, you know, planting seeds and then watering them and seeing people grow, and then helping them if they really want to do what they've done. Like, you know, Kinch and a bunch of people like Neil from my group, they started with $5,000 each, and they like took a lot of the stuff that I taught them and they started their own group, and they do very similar stuff to what I do, and we share deal flow and we help each other out as well now. So it's really cool. Like, you see people grow, and they were scared that I would be upset. I was like, I'm so happy you guys are doing that. It's crazy, awesome, right? Like and that's a lot of people, because some people are scared, like, oh, it's not being loyal. But for me, it's like, I'm teaching these people these things so they can do them themselves, so they can be a leader, so they can affect more people, because I'm only one person. If I can touch 1,000 people to do what I do, and they can make another 100 people millionaires, they can change a lot of people's lives. And that can be obviously a community you build around all of us, So you have that opportunity to like have billions of dollars of assets within a group of people and a smaller group of people, and actually be able to influence the world a lot more.
Yeah, they call that like being your own bank, right?
Yeah.
You can create your own ecosystem.
Absolutely.
And what's interesting that you mentioned there is that it's less about yourself now and it's more about other people.
Yeah. Like I've always told people, like, they're like, oh, money this, money that, and they always focus on money, and they never make money. They never make real money. They make money, they screw people over to make money, they do that. And I'm like, I've always been, when I didn't have money, when I was a personal trainer, even I was like, I'm just going to add a lot of value to all these people, and then they're going to pay me later if they value what I've been giving them, because I do it for free.
Exactly.
Even like Vlad from Gunzilla, he was, we met with Tim from Chirp, and we were both when I was in Germany, and he was like, this is the only person that literally was like, I'll help you and do this, and literally introduced all the people, gave us lists of people not to work with, lists of funds to work with, lists of funds not to work with, like all for free, and did all this work for us before he even asked for an advisory contract.
That's
I was
high
like,
level.
that's how you should be. If you want to
Yeah.
like add value to projects and work with them, do stuff because you're good at something, and then offer it and just do it because you want to do it, and they'll see the value in you later. And that's what ended up happening. And like, that's how a lot of projects I work with, you know, how we start working together. It's like, okay, yeah, I can give you money, but like, this is my network. This is the stuff I can help you with.
Introductions and
then next thing you know, they're like, wow, we have all the best KOLs, and we have all the best like marketing companies and best PR firms, and everyone's on our beck and call. And I'm like, yeah, because I have that network. I've worked with them, so I know who not to work with. I also know who to work with. And the more we work in the space, the more we know those separate a lot more. And then you basically can help a project build the most successful like strategy for everyone, not just for like the VCs, not just for the KOLs, but actually like everyone technically can win. And I proved that before, like with Eternity, for other stuff, like you can build models and build projects that benefit everybody, and not just benefit the KOLs and the VCs who can jump on you every month. But now we're looking in new models that I've realized work much better, and they're very similar to why, you know, our meme coins pump, because they're more fair.
Yeah.
And I really looked into that, and everyone still makes money, which is pretty interesting when you look at the data. So I think that's better than having pump and dump type coin tokenomics, and I think that
which they didn't really last anyway, and they're not even that profitable. It's
No,
more
they-
profitable in the longer term.
You know how many projects I tell, like, okay, I'll buy your token next cycle? And they're like, what? And I'm like, yeah, I'll buy your token next cycle. I literally say it on the call, like totally straight face. And they're kind of like, what? What do you mean next cycle? And I'll say, like, it's really easy for me to say this. You're going to give it an inflation of 900% this cycle. Inflation kills the US dollar, and it also kills the coins because they become less valuable. So yeah, I can buy in, but I told a project this morning, I said, you know, how do I have any like moral compass and tell people to buy in this project that's up 50x, knowing that 900% more tokens are going to come into the market and going to fuck all the retail people over. And the only people who benefit are the VCs and the early backers.
Exactly.
And where does your community go? Your community dies, and then you build over the bear market if you last the bear market, because most people don't.
Yeah.
And the ones who do last, and they have great ideas, and I'm like, yeah, I'll buy your coin next cycle. Then I look at it and I make my list again, and I go, oh, you're fully vested. You built all this stuff. I've had a call with you. Okay, this is one of the coins I'm going to buy on my list, because now I know it only can go up. There's no more inflation pulling the price down.
100%.
Yeah.
It's pretty much like Nakamoto Games.
Yes. Exactly. All the projects, even A0, like I looked at A0,
Star Atlas.
they did 50% TGE, and then they did 50% over the course of month one for some of the rounds. And you could actually see it pumped super hard. They had the 50% distro, it dumped down, and then it went back up again. And then they had 10% for one of the rounds for 5 months or 6 months. And that round, you could see every month that it was vesting, went down, 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 down. It bottomed out, and now you could actually look at the chart right now. You could see that it went up, came down, went up again, came way down for like 3, 4, 5, 6 months. And then now the market starts, and it starts going up, and there's no more sell pressure. Like
There's
no one
nothing
can
holding it
sell
back.
on you. There is no VC selling you as a retail guy.
And any VC that has held that long has conviction in the token.
Yeah, exactly. And some will, but most will sell, because if you don't understand how venture capital works, I give you my money. You say I'm going to make 200% gains a year over the next 2 years. So you probably underestimate. You tell people lower than you're going to do. And then, okay, your job is to actually give me cash at the end of that cycle when the fund closes and opens back up. You give all your assets back, right?
Yep.
And they sell it for you. So if they don't sell your assets and they go up and they come down, you're not going to have a job anymore.
Yep.
So you have to understand you have to sell, but there's ways to sell as a VC or even retail investor, or even a KOL or anyone.
Yeah.
There's a way to sell that's actually very positive for the project, and it's selling slowly as people are pushing the price higher. You're selling a little bit at a time, because at that point, you're not pushing the price of the market down. What usually happens is the opposite. They hold too long, it tops out, they've sold nothing, and now they see $1 million bag go to 900K, 800K, 700K, and they're like, fuck this shit, and they start selling like super hard. And then you see the chart go like super high up fast, and it's like, like an elevator, right? An elevator comes down with no brakes on it.
Up the stairs, down the elevator, as they say.
So it's like understanding that. It's like, okay, you can actually plan for what's actually going to happen. And I tell you, like, dude, how many projects I've told for the last like 3 months, I can draw your chart right now. You haven't even launched. And they're like, what do you mean? I'm like, you have 5% TGE, there's 2,000% inflation. Your price is going to go way up because there's no tokens on market for anyone to buy. And the retail guys are going to buy the fuck out of it. And it's going to shoot to the moon. And then what's going to happen right after is everyone's going to go, oh my God, I'm a millionaire. And they're going to sell all those 5%. And then when they sell those 5%, month 2, they get another 5% and double the supply of tokens. So they're going to dump those tokens because they know they're going to be worth less.
And then you got
every fucking month until you're done vesting, they're going to keep going down until people see it's so low and there's no liquidity left in the project that, okay, now I don't even care anymore. And literally there's projects I've been in, I'm like, you literally have 30K liquidity now. They're legit projects, but they're dead. And I have meme coins I invested into. They have $2 million of liquidity still. And you're just sitting there going like, how does that even work? How is that possible? It's just because they're fair. Everyone that bought off the market. And if they believe in it, the price won't go as low as the other projects.
And a lot of people forget in crypto, it's not just about the technology. It's about the conviction. Right?
People want to make money, right? Like that's.
But if I can't buy your trust as an investor, I'm not gonna hold on to your token.
No.
So I need to make sure that I'm regularly producing stuff which makes people trust the project. Most of the time, if you look at most of these gaming projects, they're like, oh, why are VCs dumping? Why don't people want to hold the token? Well, it's like, you haven't given them a reason. Well, that comes
down to like the whole utility conversation of like, what does your token do and why would I need to have it and why wouldn't I just keep dollars and the token price is up so much, so I'll just sell it and then I'll keep dollars and I'll buy tokens from that way in the game, and they won't really care. So you need to have it part of your economy. Most people miss that and they play to earn, and like we all know how that went. It was like airdropping constantly forever. And great, you're playing my game, but like why are we paying you money for that?
There's a lot of gaming guilds and Indian traffic coming from those ones. Every time a project says to me, oh, you know, we've got 50,000 users in the first week, I say, okay, what location are they from? I want to see where in the globe these people are from.
So are they actually going to pay money for more tokens?
They're not.
No, they're not. They're not. They're literally farming on like 30 phones. You saw those friggin' memes, right? Like someone's like, here,
have you seen the Axie Infinity
just playing Axie Infinity like with the guild's tokens shit. That's funny, but it's good. Like,
exactly, innit?
But it's a bad model, right? Like, and I saw a project recently. I'm not going to name the name because like I have friends who are in it, so I don't want to flood it or anything. But like I saw this project and it said we're play to earn, and I was just like, really? Like, really now? Now you're a play-to-earn game? Like, you didn't see how no one actually did well other than Axie, and they had NFTs. That's why the actual game did okay. I'm like, this doesn't make any sense. It really made no sense at all.
It doesn't make sense. And a lot of times, every project is trying to catch the trend, but they're not realizing that.
Or they changed their, we were a gaming project, now we're a step-in project, and now we're going to do something else. We're DeFi.
Now we're DeFi.
You know, it's changing with the trend, like so, and that gives me the least amount of confidence in a project, because you're like, you went out to build this, you believed in it, but because you believed in it, you switched and you pivoted right now, like last minute, and like you're going to do something else because it's hot. That just tells me you're trying to chase money. You're not actually doing a real project.
We're marketing, we're fast movers.
We're going to pivot. And I'm like, you're pivot. You know, I had a couple projects tell me this. You probably know of one of them. They said, oh, we're pivoting. We're not doing this. We're doing that now. We're a game, but we're going to do like a fit to earn thing right at the end of the cycle. And I was like, that's great. Can I have my money back? I literally said that. I was like, can I have my 10 grand back? Because I don't believe in what you're doing right now. I don't think Step-in's going to last for that long. And it's still around, but it's not like,
it will have its time, but it will have its time because it stayed Step-in. Right, Step-in's now not DeFi Step-in. You know what I mean? It's not metaverse Step-in. It just stayed the same, and eventually
it's the same. Yeah, it will come back if there's. The thing I always ask myself is like, where does the money come? Like people ask me this sometimes with projects, and if I'm like, I don't know, that's a great question. I'm gonna not invest in this project, right? Like, so that's why I focus so much on the models of like tokenomics and revenue, and how does the revenue go back into the token, and does it make sense? And like, how much revenue can you generate? How much buying power are you gonna do yourself? And what's the projection of that? Like, if you're still here in 5 years, are you gonna grow or you're not gonna grow? Is there growth opportunities? So I look at that and I go, okay, well, they're definitely going to be able to buy back like $10, $20 million of tokens because they're going to build this business up. And while people see that, they're not just going to speculate. They're going to buy in too because they see there's a viable model. And then I'm like, okay, this makes sense. But a lot of the time I'm like, so where does the money come from for the token price to be stabilized?
Treasury.
And they're like, oh, yeah, no, not
Market
treasury.
maker.
No, market maker. What was the best one I heard? Where's the money coming from? They're like, well, people are just going to keep buying the token.
No
I was
way.
like, this is your strategy. You're just going to buy the token. Okay, sure. I'm like, yeah, so... good luck to you. Have a nice day.
Yeah, man.
And then you got like some people, I had a conversation with a project and they said, we can't change our tokenomics. We can't, there's no way. I'm like, listen, like no one's going to really be that interested if you don't give more tokens.
Yeah,
on
why are
TGE.
people so diligent on not changing the tokenomics?
It was they were advised by some people who I then was working with already before. So I went and talked to the guy. And he was like, no, man, it's cool. Like a cliff is okay. Only 20% on TGE is okay. I was like, dude, get rid of the cliffs. There's not one model that had a cliff that did well.
Yeah, exactly.
It's very, very rare a cliff will do well because the buying pressure's on the first month.
Yeah.
So then month 2, there's no tokens coming out. It's kind of stagnant and boring. By month 3, they get their tokens. It's already going down. And they're going to dump them. And there's no one there to buy it. So there's no absorption. It just dumps.
It just goes to,
Yeah.
That's why most tokens, even now, are like down 99% still. There's been a few times and I have a call with even a lot of gaming projects. And my question to them now is, okay, gaming's pumping, but why is your token not?
Yeah.
And you have to ask them the hard question. And a lot of
They
excuses.
can't answer
but
it. No, it's
can't
just like,
answer
oh,
it.
yeah, like that's like, oh, we don't actually buy our own token through our protocol.
Yeah.
It's like, it's not illegal to buy your token with your protocol, actually. They're like, really? I'm like, you don't even know. You have no advisors to tell you that? I'm surprised how many advisors go against me with my models that I make. Because I'm like, I know we're all going to make more money, including
Yeah.
the project and including the VCs, because...
What is this? What is this model?
the model's like literally giving out all the tokens on launch, or almost all the tokens at launch.
Like 50 to
50 to 100%.
At launch, TGE.
At launch, TGE, fully diluted value goes up for sure. You don't have the initial market cap at like
200K, yeah, the 100K
right?
initial market cap.
Which means you're putting, here's what we're actually doing, right? You're putting $100,000 of tokens on market for a large amount of people that want to buy it. So that 100K of tokens becomes inflated so fast because there's so little liquidity actually on the market. So people buy into this 100K, but as this 100K gets bought, it becomes more and more valuable. And then the other side goes up, your ETH side liquidity, and then your price pumps, right? So the less you put in liquidity, the higher the price will go on the initial market. So that's what they're doing. They're playing the pump and dump game.
But you know what happens is like DVIO. Interested one because I seen my bags pumping, right? I held everything. And now it's up like 20x. So I'm like, okay, great. And then I looked at the market cap. And on the price side, it looks like this. On the market cap, it looks like this and this. So I'm buying in now at a $33 million valuation. But before, the price was up 100, 200x, and it was only at $5 million. So I'm like, hold on a sec. It's never going to reach that price.
No, it's never.
For it to reach its old all-time high now is over 100x away from $33 million.
Oh, yeah, because there's more tokens on the market.
But
there's
retail are just looking at the price.
Of course.
They're not paying, nobody's paying attention to the market cap.
You know what's funny?
But they'll
it's not
find
just
out.
retail. It's the projects themselves haven't heard anyone say this. The funds are telling them do it this way so that they can make more money because they know retail hold. They know retail won't sell. And they know they can pump it and retail will buy it. And then they'll dump it on you guys. That's what happens. And so if you understand that aspect, what do you do to take away sell pressure and inflation? You give people their tokens. You also remove the whole feeling as a KOL that you shouldn't be talking about it because you know they're going to lose money if they buy it at that point. So you can actually tell them like, oh, the dump happened. People sold off 50% down.
Now
good.
buy.
Guys, buy. No one's going to sell on you. There's literally no one to get more tokens. And now you're like, oh, it's safe for me, an investor, to go in. And those projects generally do a 30x after that, right? Like they do 20, 30x. I've done many projects like that.
Which
and
projects? Which projects have
like,
gone off for you?
unfortunately, one of them that I did last cycle was Phoenix Flow.
But that performed well. I made
that
money on
performed
Phoenix Flow.
30x 3 times with all the tokens out day one and never came back down to public sale price, right? And it only did after like the CEO was doing all this really shady shit and inflating the price of the token by doing OTCs and all sorts of shady background stuff. And so like, other than that, like, but if he didn't do that and that they actually did what WooX is doing, they would have been crushing this cycle. But he was one of those people that was scammy as fuck, I guess, at the end.
Interesting one. Myriad Games did a similar thing.
Myriad didn't even have any vesting. They were just like, hey, we're going to launch a token.
Boom.
And that's it. And then the only way to earn it is by doing validating in the network, which is super smart. There's no way for anyone to sell on you other than the validators. And those people are actually benefiting by having tokens.
Exactly.
And
So-
they're doing the security on the network the same way proof of work works for Bitcoin or proof of stake works for Ethereum or
Exactly. And there's a
anyone else,
limit
right?
to what I like is that there's a limit on the validator nodes as well.
Yeah.
A lot of people don't realize that.
Yeah.
They're like negotiating whether to compound, not realizing that they're not going to have the option in a few
No.
months.
They won't.
Yeah, because there's been like 600 a day
Yeah.
going on the network. And people are like, yeah, but I'm not going to be able to hold my tokens. And what about if it pumps? I'm like, have you seen this? It's not stopping.
Yes.
We're just getting started.
Yeah, the market's just early. Like,
Yeah, so-
there's not. See, what you have to look at is like the retail interest is not there yet.
Yeah.
It's really OGs and last cycle people coming back.
Yeah.
Wait for the new people to come in.
Or the
And then
TikTok
they're
kids.
going to need people like us who actually can tell them this type of information, because people that are watching at home will learn this already. So they already know which models to avoid. And unfortunately, this might hurt some projects that I've invested in from last cycle that aren't going to change their metrics.
Yeah.
But at the same time, it's like, I kind of rather talk deeply about all this with retail and tell them this is a much safer bet for your money. They're good projects. The tokens are out. You can make money and not have to fucking stress about like the pre-vesting cycle dumps, the after-vested dumps, all this shit. It goes away if the project performs. And then if the project does a 10x, comes back down to 5-6, and then their DEX, let's say, and they start making money, and as part of their revenue, they buy back their own token.
Yep.
Now there's no one selling against those buybacks, which usually that's the case for the first 2 years, and the projects can't actually absorb from the buybacks because it takes a while to build a lot of revenue for a company. So then basically they're buying into people who are selling, and they're basically not doing anything. It just
Yeah.
keeps going lower. So then they have to wait till after that, and hopefully the people are still buying and selling on those DEXs. And then after that, DEX can start growing itself and then buying back their own token through the protocol.
Oh, exactly. I was on an advisory call with another company. I'm not going to say who, but I was telling them about Swissborg.
Yeah.
And they was like, why did Swissborg pump so much? And I said, buy back and burn
Yep.
and affiliate.
Yep.
And there was already talking about 3-4 years. So vesting was finished. And you see
Yep.
the chart went like this, and then
Absolutely.
took off.
Absolutely.
Because they're making money from people trading on the app,
Absolutely.
buying back the token, buying CSB and burning CHB. So it's deflationary. And then it
Exactly.
gives people it just adds something, at least something to the economy. But
It gives you a reason to hold a token, which is what makes projects do well. The
Yeah.
reason why Shiba did well is literally the message to everyone was buy and hold and get rich. Like,
Yeah.
don't
Yeah,
sell or
super
you'll
simple.
get poor. And everyone sold super fucking early, and we all were like, wow, that sucks, because
Yeah.
I posted this on Twitter. Like, I literally posted on Twitter. You can go back and you can search
One
for this
message.
on Twitter. Me posting my my Shiba buy that was $155 of ETH.
my God.
That was literally at near the top of the market. It was 110 million in my account. Like, I literally went to that exact transaction and clicked on it, and then showed everybody, and it was like, holy shit!
Bro, it's
like,
crazy,
could
bro.
you imagine how many of us would have been like worth 100 mil already? Like, I'll get there at some
Bro,
point. Not that
yeah.
I really focus only on
but
that.
on one meme coin, that's a
But from
play.
$150,
Yeah,
like,
that's
how
a
many
play.
people bought that and actually held and cashed out $500,000?
Yeah.
That had, like, maybe bought a little bit later, but it went
Loads
up
of people,
fucking a
bro.
million X, bro. Like, that's fucking insane.
That's crazy.
That's fucking insane. I want to be part of the next million.
And the messaging again, it said simple: buy, hold, get rich.
Buy, hold, get rich. We're gonna beat the market cap of Dogecoin. That's all it was.
Super simple. When you
And
keep
then
it
of
simple,
course they added in like we're gonna do Shibarium and all that stuff later because they were like, okay, this is too big not to do anything with.
Yeah.
And so they started doing stuff. But yeah, like that's pretty much the concept of the whole entire. All the dog coins were buy, hold for fucking this reason. It was always some funny reason, memeable reason, but it works, right?
There's something to say about that for bigger projects.
Yeah.
Definitely something there.
But you can't really, as a project that's legit, say buy and hold, right? You
Yeah.
can tell people like, here's reasons to hold, and if they hold, they win if you're doing it right. But
100%.
yeah, a lot of projects, the problem is the revenue can't match the token distribution that they have. And if they did it the other way, they'd have like a 10-year vesting cycle, and it would just destroy the fucking token value because no one would ever really care about the token. You'd really have time to build it up. But if you told me I'm going to give you a 10-year vesting cycle, I'd be like, go fuck
That's
yourself.
crazy.
I'd be like laughing in you. But here's another thing about why the 100% TGE is better. Your KOLs, if they make money, are much more loyal.
They'll buy it back.
and
Most
al-
people don't think
and
buying that
also-
shit back.
Yeah, but also like your KOLs now and the VC funds that have been fucked by hundreds of projects saying, oh, we're going to change vesting because they realize, oh my God, if we keep giving you these
Which
tokens.
One? What was that project? I was
Whether it was,
talking
like,
about the other
Deeper,
day.
there
One that did
was-
1,000x.
Blocktopia.
Blocktopia, that was crazy.
Yeah.
1,000x
Yeah.
didn't pay none of their private investors on
Nope.
TG.
Nope.
That was like if you put 20 grand in, your first distribution was like 200 grand.
Yeah.
Or I think at one stage
More.
people was
It
like
was more.
a million,
Yeah, it was like 1 million.
which is crazy.
Yeah, because they kept pumping on a very small amount of supply. Like I said, if you have 100K when you launch,
That's why they wasn't
and
dishing it
everyone
out.
wants to buy that
Yeah,
100K.
yeah.
The 100K could go to millions and millions
Yeah,
and
yeah.
millions and millions of dollars, even $1 billion, like ShopX did.
Yeah.
ShopX
Shop,
did.
ShopX 200. Yeah,
ShopX, bro,
They only
hit
had
$1
like
billion market cap. $1 billion
Yeah.
on launch. Like this is the last thing you'd want as a
on
project
200k
ever.
liquidity. It was
Yeah.
like it was crazy.
Because everyone wanted it, right? So if you build enough demand and you have 100% of tokens out, change hands happens, and then it's a real fully
and
diluted
it would
value.
last till now. Now
Yeah.
ShopX would still be way higher than where
It'd
it
be way
is.
higher if they give 100% because everyone would have bought in, and yeah, they would have sold off in the bear.
they'd
But like
buy
all
back.
the tokens that I've launched, I realize if you keep the price really close from private rounds to public, and you launch 100%,
Yeah.
the price will never go back to public ever again.
Yeah,
it's
yeah,
very rare unless you fuck the whole thing up.
Yeah.
And so that's all you need to do is like get the hype on the launch, let everyone change hands, keep building, keep announcing all the
And
stuff
look
you're
at
doing.
Mirror. Mirror's in price discovery. That's
Yeah.
what not people are thinking about. They're just thinking about initial pump.
Yeah.
They're not thinking about
It's already
give
all-time
it-
high. It's going to
yeah,
keep going.
Give it some
No
time.
one has any more tokens. Yeah, okay, people mine tokens, but
Yeah.
they're not going to sell them now because even the people who bought in the original Mirror round are still not in profit yet. They're
Yeah.
getting closer, but like, are you really going to sell when you see like a
When you
huge
see it,
ecosystem
boom.
growing and you watch Gala last cycle and you see what the market cap is of this? You're
Exactly.
like, oh, it's a much better bet, and like the team is really good. They worked with Rockstar Games and all
Exactly.
like EA Sports, all this stuff. Like those people, you're like, all right, they can build stuff. They know how to do it. They've
Exactly.
clearly been building a good ecosystem because it's going up in value. People are seeing that.
They understand that
Yeah.
the price of the chart is the best form of market.
Absolutely.
You know what I mean?
Yeah. Like,
So, look, before you go, I want to give you a few questions that I got from the community.
yeah.
And one of the biggest things is that Ichimoku trading strategy, which is one of
Yeah.
the things that makes you different to most
Yeah.
other traders out there. Nobody uses this. So,
There's some. There's like Zorhan and
Zorhan.
yeah, my buddy Zoran, Captain Cole. He kind of was really forward, and now he's kind of not as out there on Twitter and stuff. But he's where like I started seeing the strategy with him, and then I was like, I'm gonna dive into this, and that's kind of where I was like, all right, I'm gonna look into this a little deeper because I was just using like levels and other stuff like RSI and MACD like normal people do when they start, and I was like, man, this guy's like, it seems like really simple, like it's rule based.
well, patterns.
It's just a pattern
is
and it's
crazy.
rule based. So you see the same thing over and over again. And sometimes you go, wait, when the chart looks like this, I shouldn't enter because I know from past, like I don't hit as often as when it does this.
Yeah.
Right. And like that's the stuff that I teach people. I'm like, literally, when you have like on my course, it's like you go to the page where it says the checklist and it's like, is this there? Yes, check mark. Is that happening? Check mark. Is it Chiku bullish? Check mark. Are we above the cloud? Check mark. Okay, well, how close is the Chiku to the candlesticks? Oh, there's a lot of space between them. Okay, you have a lot of alpha here to go into that trade. And the average Ichimoku trading strategy does 60% minimum.
That's the
hit rate.
difference with this strategy, which is
You're
crazy.
the casino with this with this strategy. If you do it right and you're not making, you'll make a lot of mistakes when you start because like you'll think this is good.
You try to
but then
front run it. I kept trying to front run that.
you front run
through
anything, you
cloud.
fuck yourself because once
Yeah.
it closes, then you know really if it's
Exactly.
if it's going to break out. And so, like all this kind of stuff you learn, but you have to make those mistakes. That's why 10,000 hours on a chart, seeing the same pattern over and over. Once you see like the same pattern, and your brain naturally remembers stuff that makes you a lot of money on a really good trade. So you see that exact same setup over and over and over again. And because I trade on a daily time frame, you're not trading every minute, every day.
it's chill. It allows you
It's
to have
super chill.
businesses.
You're like, could take 2 weeks, could take an hour. Like I was with Mike the other day, and like we were doing a video, and I was talking about auction. I'm like, yeah, this is one of my 5 hot picks. And then literally like 3 hours later, I sent him a picture. I'm like, holy shit, it's up 24%
That's
from the
crazy.
exact time I was talking about in the video.
That's crazy.
Right now it came back down, but like literally, like you could have entered that and been like, it's up 24% a day on a daily chart. I'm gonna take some profit and
Yeah.
move the stop in a little bit higher, and then
Yeah.
chill.
Exactly.
And you make money that way, right?
Exactly.
Unemotional.
And that's what's good about the strategy as well, is it gives you a lot of room. Whereas most trading strategies, you're just getting stop loss on it.
Yeah.
Every single time you enter, because you're trading on such a small time frame, you're just
Yeah,
getting
the
wicked
market
out.
whips around. It's like it's not like the Forex market where there's trillions of dollars every day running through it. This is a very small market still.
Exactly.
And like the things can move very quickly with a 5 ETH buy some projects too, right?
Exactly.
So if you're trading on Bitcoin, like you have to give yourself space, but also on the daily frame, like as long as you learn how to do the stops in this strategy, which is literally is part of it. It's like you put your stop below the Kijin or below the cloud or or both below both if you have some extra room and you're still at a 3-hour trade, and then you can always like reduce your risk by moving the stop up a little bit once it starts going.
What would you say is the biggest mistake that most new traders make?
Oh, just like trying to trade one strategy, it doesn't work for a couple trades. They go to another strategy. They go and try and they're just trying to find the meta instead of like learning one thing and doing it well and then letting that progress. You know, and the thing is, you're gonna have in every strategy time where you lose 10 trades in a row. Yeah. And that's going to happen, and you have to be, that's why you trade 1% risk, because if you lose 10 in a row, after 5, you might reduce that and you might lose 7.5% of your account. But if 2 good trades happen after that and you're doing 3R trades, you pretty much in 3 good trades after that make your money back.
Yeah.
But if you're doing 2, 3, 4, 5%, yeah, when you lose like 10 trades in a row, you lose half your account, 30% of your account.
Stress, yeah.
So you have to learn to manage your risk in the trade before you even go in. You should go, okay, based off of this stop loss, this is my risk. Divide your risk. If it's $500, $100, buy your stop loss. That will tell you how much money you put into the trade. So we'll give you position size. Sometimes you risk 100 and you're putting in $2,000 into a trade. Yeah. Your stop loss is whatever. I can't think off the top of my head, but if your stop loss goes, let's say 20% down, then you're going to stop out. Something like that, right? So then it would stop and it would be, okay, you lost your $100.
Which is not that deep.
No.
Exactly.
But it's like, it teaches you that this, and then when you look at leverage, that's why people use it. But most people use it to add risk. They don't use it to just to micromanage how much money they have on an account.
Yeah,
because
to manage margin.
You don't want to put like $25 million on Binance, for example, and then your risk is that the Binance closes and you lose all your money.
Yes.
Whereas you could put 2.5 mil, let's say if you're a large scale trader, and now you could trade with 10x, and as long as your stop loss is less than 9x, like 9% away from your stop, you can always trade 10x, or you could go to 8x or 7x or 5x, doesn't matter. But your risk of trades now becomes a lot less, because like your overall risk would be 25 mil, now it's 2.5 mil. So if Binance or exchange blows up, yeah, terrible to lose a ton of money, but like it could be 2,500 even.
Exactly.
But it's the point is like you have less risk. But most people don't do that, and they don't understand that if I'm going to risk $100, if I'm doing that with 5x, 10x, 20x, I'm still only risking $100. I'm still dividing my stop by this, and I'm borrowing against the exchange, so I don't have to use all my money into one trade. So I can open up 2 or 3 trades or whatever.
It's one of those things I say to a lot of new traders, you're trying to trade to live. They're not trying to trade to learn.
No.
And that's the reason. So they try and trade with their life savings. They're under so much pressure. They're not following the strategy. Yeah, exactly. They get wrecked
because it's not even your follow strategy. You're scared to lose money.
Exactly.
And when you're scared to lose money, you don't
even.
It's like going to a casino.
Poker. It's like poker, bro.
It's like going to a casino and being like, all right, I'm willing to lose $500 here.
You make more.
But then you put like you're 10xing it. I'm gonna do 10x leverage at this casino, and like you don't have the money to lose. But you're like, all right, well now I have $5,000 in chips, and then you go all in and you lose, and you're like, oh fuck, how do I get the other 4,500 back? You're not gonna get it back. It's gone. So your whole account's gone. You're done.
Putting more money on.
Yeah, and now you're like, all right, you don't dial me back in. You get another $5,000. Next thing you know, your whole entire portfolio is gone.
Yes.
But it's like very simple to learn. Like it's literally one thing you have to learn. If your stop loss is 5% and your risk is 100, you take 100 and you divide it by 0.05, and that's how much money you put into the trade. You set it all up. You enter at this price. You have your stop loss here, and you have your take profit there. You literally could put the trade in, walk away, and just don't look at it for a week, and it can either hit stop or it'll hit your target, and that's it. If you see like a notification that it's gone up really, really fast and you had a big target, you may want to be like, all right, I'm going to close half the position here, and then I'll let it run, but I'll move my stop into profit, and if it drops back down, I literally can't lose.
Something money.
Like that. Free money. And you can't do that all the time because that can cost you a lot of your R's on your trades.
Yeah, because the risk,
because you're managing it too tight. Yeah. So I generally don't even do that. But I tell people to do that. Like if you're up 25% on a trade and you then let it hit stop loss, it's fucking stupid. Yeah. It's really stupid because you already made the money. It's already in the bank. So why don't you move to 5% and give yourself a 20% movement for you to get stopped out? But you guaranteed make 5% on that trade, even though that might be 0.5 R. It's a safer bet. When you get to a point where I am at, you won't even give a fuck about that 0.5 R. You'll let it stop out.
Yeah.
But like it's
because you're in so much profit from all the other trades.
Yeah, you know that this is going to hit or this is not. If I'm making bad decisions on stop loss placement, I learn from that and I go, oh yeah, next time I'm going to go a little bit deeper. I'm not going to try and make it fit into the 3R that I want. Maybe it's going to be 2.5 R, but that's still good. 2.5%, 2.5 times more than I risk is good.
Yeah. It's
still like 30% of the time you could hit and you still pretty much break even. That's good.
That's not bad at all. Yeah, exactly. Right. So what would you say are some of the coins to look out for this cycle? Because that crypto list went crazy. I noticed you had narratives, large market caps, some small market caps on there. And it's hit pretty good, especially with some of the calls like Elrond. I think it was a Rune or some other tokens.
Rune, we were in it like like just $1.25. I'm up $500,000 on my Rune trade already.
Ripped.
And it's like just starting the cycle.
Exactly.
It's like I was taking profit from that trade. I was telling you about cycling earlier. Like I was taking money from like my Elrond when it went crazy. I took money out of like some of these, and then I'm like, oh, VeChain hasn't gone. I'm like, put that profit into VeChain, even though I have a bunch of VeChain. I'm like, throw it in there. I'll compound the interest because when that goes on its run, then I'll take that money out of that, and I'll be like, which one hasn't run as much? And I'm like, oh, this one hasn't run. It's got a lot of potential still. Boom, and put more into that. So basically, like make my bags bigger. Even though I have massive bags now, it's like don't keep them all in one coin because like take 100 to 200K, put it in 100K in this one, 100K in this one, even though you have like say 100K already.
Some people are drinking the Kool-Aid. Like you see Elrond going, they're just in Elrond Telegram. We're going to the moon. We can do this.
Always.
They're not taking any profits and moving on to new ventures, which have
no. But here's the thing: taking profit doesn't mean selling your bag. I think people always mistake that. It's like you see something that you bought at $1.50 and it's at $6. And you're not taking some off to put into something that hasn't moved yet. And literally, you know that on that list is very likely this list is going to go at least 10x on most of the coins. Why wouldn't you put it in something else that can go 10x? Because for Rune to go 10x, it has to go way past its, like 3 times past the all-time high.
100
from where it is.
Yeah.
So no, it's like 650 right now. So for it to go back to I think it was $21, is like a 3x. Why would you keep all your money in that? You still keep money for that because it's making you money already. But like take some out and put it into one that hasn't moved. Because if you cycle funds, you become multi-millionaires. You don't become a millionaire in a cycle. You could do it and you wait and leave them all run up. But you want to be like 10 mil, 20 mil in a cycle, you have to cycle from one coin to the other. And it doesn't even matter if you have like $1,000 in each coin and they go up 5x. The same rules apply. And that's, remember, like I was telling someone on a podcast yesterday, I was like, man, I remember the time I was so happy I made $100 on a trade. Yeah. Like way back in the day. I was like, wow, I made $100. Then I was happy I made 500. Then I was like excited I made 1,000. And now, my risk is 10,000 minimum on a trade. On a minimum, it's 10 grand. Minimum, sometimes $20,000, right? As if I lose that trade, I lose 20 grand like that. And everyone's like, how the fuck do you stomach it? I'm like, the same way I stomach it when I was doing a $100 trade and I would lose money.
It's just relative, isn't it?
It's all relative. If you keep risk at 1%, it's still your risk is whatever you have in all your money. So if you have $1,000 and you have 10%, and you have a risk of 1%, you're literally risking $10 per trade. If you have $10,000, you're risking $100 a trade. If you have $100,000, you're risking $1,000 per trade, 1%. Yeah. And like all you have to do is if you're doing well in trading, which most people that do well do like 200-300% in a year. Yeah. Like a good top tier trader in crypto. And in the bear market, they'll make less. But
you can deposit more. Like a lot of people are not thinking about the fact that you can just increase your income as well as increase your investments. Yeah. Just do a side hustle. Do more hours at work.
That too, yeah.
And grow your account while you're trading with the correct risk. And eventually it will grow naturally.
1% of 10 grand when you're starting out $100. Yeah. You do, let's say you do, in 1 month, you do 10 trades. You hit 60% of them. You're risking $100 per trade. So you lose $400. And then you're multiplying the 6 by 3. So you make $1,800. So you do that and everyone knows the penny. If you double a penny, double a penny. Yeah. The same concept, but it may not be as fast, not doubling. But like, if you keep going up 20% every month.
Especially in crypto when you can trade perpetuals with like Bitcoin or something. You're trading BTC with BTC, so it's just growing.
It just grows. And if you cycle it, it grows faster. Yeah. So I keep teaching people like you don't need to be a good trader to do this.
What are cycles and what is cycling?
Cycling is like generally what you're seeing right now, gaming and AI are two sectors of crypto that are pushing higher than everything else. So it will cycle from gaming and AI, maybe into NFTs like it did last cycle in January, and then into maybe storage coins, and then it might go into DeFi products, and then so you're gonna see like cycles, and you see this in the stock market all the time. They're very cyclical. Like one sector will move, like the FANG stocks will all go together, and then you'll see like a lot of like telecom communication companies will go together, and so people make baskets basically, and then they invest in these baskets, and one basket moons, and they put money into the next basket because the money flows from one to the next. It always does.
Interesting, right? Because I was going to mention that is, I was having a conversation with one of my friends, and he was like, it's so crazy how money is just like water. Yeah. And in the markets, it's the same terminology. Money flows, or they freeze your assets. Yeah. So it's just the same, and it's just like a river. You know, same in crypto, as you mentioned, when it starts with the large market caps, then the medium, and then the L1s, L2s, or gaming that we've got now. It just flows from one to another and another.
And if you got a list like I do, and you have most of the
And
stuff
you've already
on
planned
that,
it out. Yeah.
so you already know you're in those things, so you're not even going to miss out even if you just hold everything.
Yeah.
The idea is you see something shoot up to like 4 times as high as most of the other projects, and if you just leave it in there, it's going to correct. Everything goes up and then comes back down to correct. So when you see something that's really gone on a crazy epic run, you take some profit, you put it into stuff that you know might be next. You don't know when it's going to happen, but you're still in a very slow mindset of, I just need to leave it for the cycle. This is what the whole point of this is, you buy it and leave it for the cycle. But within that list, you can cycle the coins into what's hot and what's not.
Yeah.
And as they switch, you double down on your profits because you already made 400 grand, 500 grand on this coin. Well, this coin could go 500 grand and make you 500 grand too. But if you left it in there, this might turn into 400 or 300, and then it's just 300. But this one then goes, and you make your 100 grand go to 200, 300 grand. But you could have made your 100 grand go to like 500 grand too.
Yeah.
And now you're cycling to that, and now you're getting more and more more and more money.
Your net worth is growing.
Yes, and it's like, as long as like at the part of the cycle where we're at like 9 months before after 9 months after halving is when I start looking to scale out of stuff.
When you start.
I start scaling out slowly. And then what I do is I put like 25 or 50% into a Trezor that I don't even have the ETH in or anything yet. Like there's nothing in it. And just chuck money into that, chuck money into that, chuck money. Like basically a savings account that you don't look at.
Yeah.
And you won't realize it because you have all this
bank
money
accounts.
from all,
I remember last cycle, I was just loading different bank accounts. You know what I mean? I went back to Dubai, they opened my account. It was like, oh, you got 20 grand in this one. I was like, oh,
nice.
Forgot about that one.
Yeah, I forgot about that. Yeah. Well, I found wallets with 100 grand in last cycle.
Exactly,
too.
right?
Like I didn't remember.
And it's those like treasure chests that you set for yourself.
You just like open up a bunch of Trezor accounts. You're like, oh, I'll pick this one. This will be my save. And then every time you just know that this is like the one that you're going to send money to. You don't take money off of it. You just send money to it.
Yeah. They say you should do that with some Bitcoin, right? It should just be like a new Bitcoin address, and you just send it just in case of
leave it. Yeah.
Just in case of like a mass hack, as they say, innit?
Yeah, because better to have multiple wallets because each wallet has its own key.
Yeah, exactly.
So like if they hack one of your MetaMasks and you have only one MetaMask wallet, you're fucked. You lose everything. But if you have 500 wallets, the chance of them getting your actual MetaSeed is like on you. You fucked something up.
Exactly.
But if they don't have your MetaMask seed and they get one wallet becomes compromised, like you do an NFT claim or an airdrop thing.
Emails now. A lot of people got scammed by Myriad. There's somebody sent out an email. And it's like your rewards are waiting for you. And the email, I was like, bro, they've never emailed.
The email address? Like the email address is like @gotcheese.com.
I was like, they've never emailed you in the past 2 years, and they think they're gonna email you now. It was like, it's a scam, bro. Yeah. You know what I mean?
No one gives shit for free. You would know from them online. It would tell you, yo, did you claim me and shit? Like,
exactly.
So many dumb people make really bad mistakes.
Yeah,
because they're too lazy.
People are lazy to have multiple MetaMasks. One of my friends was like, oh, you know, how do you manage all of those wallets? And I was like, it's just logic. Sometimes just label them.
Yeah, you just label the wallets with what you put in, and then you make fresh wallets all the time because then no one can copy all your trades.
Be fair, I know like the end of my wallet addresses I just know them.
Yeah.
I'll be like, oh, what? I'll be like, Ryan, you sent it to 256. They're like, yeah, 256. I just know which one.
I don't remember that, man.
Yeah,
you have better memory than me, bro.
This is how it is, isn't it?
Too much stuff in my brain.
Yeah, exactly.
Yeah.
But look, man, we'll leave that there.
Okay.
What I would say is, guys, if you enjoyed the show and you do want to learn more, trust me, the crypto list is a big thing. Joel's made me a lot of money on shorts and going against the market and just market psychology in general. So if you do want to see more, let me know in the comment section and make sure you go ahead and subscribe to your channel.
Do it, brothers.
Peace.
And sisters.